This video is all you need to trade the foreign exchange market profitably. And you may be asking yourself, who is this kid sitting in front of a banner? Well, my name is Mike from CapitalHillFX, and I've been trading the foreign exchange market for a little over 3 years. In the last 8 months, I've been sharing my trades live time with my premium members, showing them my payout certificates, my own MT4 terminal, and my trading view history. Go ask your favorite guru if he does that. Not many do. So I'm going to jump into the charts. I'm going to give you a deeper look of how I come up with my sentiment, my own analysis, and how you could implement this system in your trading journey. Without further ado, let's jump into the charts and take a look at it. I'm going to share my screen. I'm going to make sure to expand this video so you see my beautiful face. And really quickly, if you're new to trading, I want to give you a better idea of how the markets move and how you could identify market structure, because that's very important with this trading system. So you should know that price does not move in one direction. We move in impulse and corrective phases. And in this example, we are creating an uptrend, which is just categorized as higher highs and higher lows. We could see that price is continuously wiping out the previous highs, and we are then creating higher lows. And this just plays out over and over and over again within an uptrend. Inversely, we have what's called a downtrend. And a downtrend is the exact opposite, you guessed it, of an uptrend. It's just characterized as lower highs and lower lows. And a lot of time, price usually bounce or breaks at these zones. So if you're able to effectively analyze and identify these significant support and resistance levels, you are able to capitalize some bullish or bearish bounces off of these structure points. So we're going to get a better idea of how you're going to identify and analyze these significant zones so that you're able to capitalize these bullish or bearish impulse moves. And we're going to get a better idea of how you're going to manage the trade or structure risk in the markets so that you're able to catch some profit. So off of this example, we could see that we are creating higher highs and higher lows. If we wipe out a previous high and come back and test it as a potential higher low, we would be anticipating that price is going to make another bullish bounce, if not towards the previous highs, wiping out the previous highs and continuing the uptrend. Inversely, if we wipe out the previous structure, we'd be looking for price to come back and retest it as potential resistance before looking for potential downside movement and putting in a potential lower low, and then coming back, putting in another lower high, and then wiping out the previous lows and putting in a new lower low. So the whole point of trading support and resistance levels is making sure that you have context of where price has previously headed so you can get a better idea of where price is going to head in the future. So for example, let me delete all of this and let me sort of give a hypothetical situation. And again, I think it's very good to see this with arrows so you're not too confused with candlesticks, because it could be very overwhelming, especially if you're a new trader. It could be very overwhelming looking at candlesticks and looking at all these different indicators, oscillators, Fibonacci retracements. Like most people teach Forex, they show you all this smart money concept and institutional trading. If you're anything like me, you get very overwhelmed with all those different types of things on your charts. And this is just a more simplistic approach to trading the markets. If this ends up working for you, I hope you're able to use it to your advantage. So we can see right here, this is just a scattered chart that could potentially play out in real life. So I'm just going to give you a good idea of how you would logically place an order off of this exact chart pattern, right? So we can see that price recently pushed into the zone, had to put in that higher low, and then we wiped out the zone, came back and tested as potential support. Now, logically, you could be placing a buy order. And again, we're just guessing that this is on the hourly time frame. Let's just assume that this is on the hourly time frame. You would be able to actually place a buy order once we broke through the structure, came back and retest. Is the typical break and retest of a significant structure in the market. And all we would want to do is place a buy order with the stop loss below this previous low. So we could actually just play it out below this previous low. Because if we're insinuating that price is going to continue this uptrend, we're going to say, okay, price should not wipe out this previous low. And if we're going to create a new higher high, then we might as well just put our take profit at a reasonable point where price could potentially smash it and put in that higher high. So usually I like to put in 1-to-1s, and a lot of people may be like 1-to-1s, that you're not going to catch any pips or profits like that, right, Mike? You need to look for 1-to-2, 1-to-5, 1-to-10s. I hear some people doing 1-to-8 and 1-to-10 risk to reward ratios, and I'm thinking to myself, holy crap, 10%, 12% of the time you're hitting take profit. I mean, you could be able to find profitability with that type of system, but wouldn't it be just easier to trade bounces off of these structure levels? Because there's a 50-50% chance that price is either going to bounce or break at this level. And if you're using a 1-to-1 risk to reward ratio, it's much easier for you to hit your take profits and still be able to capitalize on the profits with this structure of risk. And I'm about to show you in a second how I manage and structure risk. It's much easier for you to be able to find profitability in the markets rather than looking for 2-to-1, 5-to-1, 10-to-1 risk to reward ratios. So now that you have a good idea of how the markets move, let's get a good idea of how we'd capitalize on these movements. So we have a break and retest of this structure. Logically, we could place a buy off of this significant structure in the market. Stop loss below the previous low, take profit at a 1-to-1 risk to reward ratio. Now, when we have price push into profit, let's say that we began to push into profit, let's say 10, 15 pips, what you could do is you could add another position. That's right, you heard it right. Another buy position you could add to this trade, because if we're pushing into the zone, we could potentially be putting in that higher low, and we're getting a lot of bullish pressure, bullish momentum within this uptrend. It's a very good idea to buy in an uptrend and sell in a downtrend. So this is a sort of a trend-based system. Of course, you could use this as a counter trend-based system, but you want to sort of stick with the trend and make sure that you're optimizing it as you backtest. But we could see if we ended up placing a buy off of this significant structure, and once price actually pushed into profit, let's say 10 to 15 pips, we could place another buy, the same exact lot size, and we could put this stop loss, the first position's order, to break even, and then leave this stop loss at the same exact amount of pips that we had at the first one. So previously we had this at 22.2 pips, and we could just put this to break even, and then this one would stay at 22.2 pips. The whole idea is if price just keeps whipping towards the upside, now we have two positions that could accumulate profits. But even if we come back to the level and test it multiple times, we'll get stopped out of this first trade at break even. Okay, so let's say we get stopped out of this trade at break even, and we're still in this trade. The same logical trade of just trading a bounce off this significant structure, right? It's just a little shittier of an entry. Excuse my French. But this plays out over and over again, right? So we could see that we ended up pushing, wiping out the previous high, and we continue this uptrend. But then quickly we came back and actually violated the zone and came back to test as resistance. So what would we do in this scenario, considering we wiped out this previous low? And again, if we wipe out this low, if we wipe out a lower low, now this uptrend has been broken, right? Because we're steadily creating higher highs and higher lows. But once we wipe out this higher low point, and then we come back, we could potentially be putting in a lower high to continue this downtrend, right? So if price came back to the significant horizontal level, not only did we just previously wipe out this structure, we're coming back to test this as potential resistance because we bounced here as resistance and support previously. And again, this is just on the hourly time frame. We're only using one time frame to get a good idea of where price could potentially bounce at. So what would you do? You would place a sell right around this resistance level. And again, the stop loss would probably be above the previous high. We could put it at right at 25 pips. And the take profit, a simple 1-to-1 risk to reward ratio. Like I said, this just makes it 50-50. So most of the time that price is pushing for your winners, you'll be able to capitalize on two trades. Because remember, once price pushes into profit, whether it's 10 or 15 pips, you'll be able to add that second position and bring that first position to break even and let that second trade run just as normal as you did the first position, right? 25 pips, and let this run at a 1-to-1 risk to reward ratio. And you're getting around a 2-to-1 risk to reward ratio without actually having to target a 2-to-1 risk to reward ratio. So it minimizes your risk and also capitalizes on the upside that you could get in your account balance. So let's say that price just started whipping towards the downside and we ended up smashing the take profit. Cool. So we would end up yielding probably around 2 units of reward off of this exact trade order. And this is exactly how I trade 24/5 because the markets are open 24/5 while it's closed on the weekends. Let's take a look at live examples so you're not just looking at arrows on a chart. So I'm going to show you an example on USD Canadian dollar. So we could see if we scroll back on the hourly time frame, and again, we're just going to use one time frame just to make this super, super simple. If I asked my 6-year-old niece which way this is going, I think she would say it's going down, right? We're overall we're creating lower highs and lower lows, and price is melting towards the downside. So naturally we would want to look for downside movement. Now, if we scroll back on the hourly time frame, I think it's a very good idea to be able to identify significant structures in the market. And we can see that this is a pretty significant structure where price has bounced multiple times, had clear intent with direction. For the most part, most times that we came to this significant structure, we either bounced or we broke and tested that as that opposite structure, right? We could see that we broke through, came back, tested as resistance, cool. Pushed really deep into the zone, tested as resistance, came back, tested as resistance, broke through, came back, tested as support, pushed, came back, tested as support, pushed, right? Now we came back, broke through the zone, came back and tested as resistance, and I was looking for downside movement. Now let's go a little closer into this trade order because it will give you really good context of why I placed it and how I managed it. And after this example, I'll actually go into my Discord and show you the trade that I called out live time with my premium member, just so you guys aren't thinking that I'm faking. So we can see that we came back, tested this resistance level, this hourly resistance level. And again, I'm not using Fibonacci retracements. I'm not using moving averages. I'm not using RSI. I'm not using all these different things that a lot of smart money concept institutional traders use. We're keeping it stupid simple here. Trading off of support and resistance with a 1-to-1 risk to reward ratio and just capitalizing on our winners and cutting our losers short. That's the whole system, right? Let's take a look. We can see we came back, tested as resistance. We had a very strong push towards the downside. That's when I placed my first position. I'm actually going to remove one of these just because it makes it a little bit simpler and easier to look at. We can see we began melting into profit, started pushing really quickly towards the downside. This is where I entered. I initially had a 40 pip stop loss. So this stop loss was at 40 pips right above this previous high, where I believe price is going to put in a lower high, right? Because if we scroll back, we are steadily creating lower highs and lower lows. I was just waiting for price to break this structure, come back and retest and test this as, or treat this as the potential lower high. And then we could see price began to melt towards the downside. So what did I do? I added a second position right around this point on the chart. I think it was like 15 pips into profit when I entered. Actually, it was only like 9 or 10 pips when I entered. So I brought the first position to break even. So it's a risk-free trade. And I added a second position with the same exact stop loss in pips, right? So it's still above this previous high. So even if price comes back and tests like the previous highs, obviously I still run the risk of getting stopped out, but it's still the same amount of risk had I only kept one position open, right? So we're just capitalizing on that downside move if we end up melting towards the downside. And at the same time, it's the same amount of risk. So we're not really exposing our account with much more risk. So that's why I love this risk structure, because you really are capitalizing on those winners. And we could see this just ended up melting towards the take profit. So really quickly, I want to go into my Discord server and show you the actual order that I called out with my premium members. So this is July 12th. And we're going to go back into my premium analysis. And again, this is the channel, exclusive channel that I share with my premium members. For this week only, I'm actually sharing this channel with all of my free members. And if you're not in my free Discord server, what are you doing? Like, I share so many trading setups. I have a free course in here, webinars. We have a general community chat that will help you with your trading journey. It's very important to be able to join a community, especially if you're new to trading. Trading could be very like isolated and by yourself. And a lot of people don't have confidence in their trading system, and a community is exactly what you need to be able to propel yourself. So here we are. I said it was the 12th, correct? July 12th. So we're here on July 12th, I believe. Yes, July 12th, 9 a.m. So this, again, this is my terminal, right? I show you the negatives, I show you the positives, I show you the bad days and the good days. This is the life of a trader. Most traders aren't showing you the transparent truth of trading, right? Like the bad days, the good days, they only want to show you the blue numbers. They only want to show you this. They only want to show you the blue screens, right? And that's not what we're doing here. So again, we're here on the 12th. Here is the USD Canadian dollar sell order that I just showed you. It was literally the exact order that I just showed you. Is a break and retest of this structure. I just didn't have the rectangle present on my trading view. And this is pretty much the orders that I closed previously. And again, I'm always taking screenshots of my terminal, just making sure I'm super, super transparent. This is exactly where I placed the order, and we could even check the price, 32079. And we could see this first order was 32079. We could see the second order somewhere here. Here's the positions on the USD CAD on the chartos, right? And I showed my second position, and that's the exact positions that I just showed you on the chart, right? So I entered the second position once we started to push aggressively into profit on this first position. And this is it on the terminal, right? 1700 for the first position 800 with the second position. And remember, this first position, the stop loss is at break even. And the second position is the stop loss in 40 or 50 pips, the same one that we had in the first position. And then I show the closed trade. Here it is. I made around 7 grand on this trade, I believe. So a super, super good trade. And again, it was literally just a bounce off of a resistance level. Take a look at some other trades that I placed in the market. And again, not all of these end up playing out, right? We could see on AUD USD, I tried to place a trade off of this significant resistance level within this downtrend, didn't end up panning out. I show sort of when I exited. And this is the whole point. If price isn't showing you that it's going to respect the resistance or support zone, just exit the trade. Like, cut your losers short, because your winners are going to trump your losers any day of the week, especially if you're effectively implementing this system. And that whole point, that's the whole point of trading. Winning more than you lose. Everyone thinks that you don't lose with trading if you're profitable. That's not the case. Let's look at GBP CAD. We can see on the hourly time frame, steadily creating higher highs and higher lows. Look how clear this uptrend is, right? Steadily creating higher highs and higher lows. This is basically what I was showing you with the arrows, right? You want to identify these super clear trends that are continuously wiping out highs and coming back and testing for higher low points. And all I was looking for was just, and that's the 4-hour time frame. This is the hourly time frame. All I was looking for was literally a bounce at this structure, and we ended up bouncing. That's why I placed the buy. Stop loss below this previous low. Take profit at a 1-to-1 risk to reward ratio. Let's see if it ended up panning out. This is my terminal when I placed it. We could see a couple hours later that, well, when was this? This was 2:22 p.m. one day. And then the next day, this is the next day, I'm guessing, we began to push into profit. And that's when I entered my second buy order, right? Because we began to push into profit. This is it on the charts. And again, super, super transparent, just showing everything completely naturally. And I joke and I say, if we push higher, it's Lambo time. I joke because I hate Lambos and I'm not a materialistic type of person. I just trade, right? Most Forex influencers, they're like showing you the Rolex watches. They're showing you the Cuban links. That's not the type of trader I am. I just sit in front of my screen on a day-to-day basis and trade support and resistance levels. But anyway, this was an update on both the positions. We could see this was a little over 0.5% of gain, and this was under 0.5% gain. And then once we actually began to really push into profit, we were like over 2% gain off of both trades. And then I believe I closed out, let's see, I removed the break-even stop loss on GBP CAD. For the first position, we have CAD news coming. And if we have some bullish pressure, we could be wiping out those highs. Stand by. And then we could see, this is the life of a trader. This profit, $4,166. I could have closed it out here. But what did I do? I waited for price to wipe out that previous high, and I paid for it, right? We could see that we only ended up getting $1,000 profit off of GBP CAD. And a lot of you may be like, Mike, you're a terrible trader, right? Like, you should have closed out here. I want to make something very, very transparent and important. This exclusive channel is the life of a trader. I'm not hiding anything, right? There's going to be a lot of times where you're up 2-3% on a trade, and you want to get a little bit more because it's going to smash your take profit if you wait and you want to stay patient. But price ends up going against you, and the price action doesn't look good, and the momentum looks like it's fizzled out. And it's much smarter to be able to remove your ego and emotions from the trade order and just make logical trading decisions, rather than being like, oh no, I was at $4,000, but now I'm at 1,000, so there's no way I could close it. Make logical trading decisions, not off of emotions, off of practicality. That's what's important about trading. So we could see this was the initial trade order, but we could see we end up actually rejecting away from these highs. And I bet if we go to GBP Canadian dollar, we'll be able to see this right away. And again, we could go to the hourly time frame, steadily creating higher highs and higher lows. And this is exactly where we ended up sort of like creating this nice little resistance and pushing towards the downside. And I'm glad that I actually exited the trade, because look, we ended up breaking this preceding uptrend. And what ended up happening? We came back, tested this resistance level, pushed towards the downside, came back, tested this resistance level, pushed towards the downside. For the most part, the same thing plays out over and over and over again. Just to show you this, I'm going to go into backtesting data and show you a couple of trades like this, right? So I'm going to move my face to over here. We're going to go to backtesting. We'll use AUD USD for the example. I'll clear all the drawings. And we'll go back in previous data and just test this trading system. I'll do like 3 or 4 or a handful of trades, and we'll get on with it. And if you haven't backtested your trading system yet, what are you doing? That's my real question. You should really backtest your trading system. Okay, so on the hourly time frame, again, I'm just scrolling back in previous data. We could see that I'm back in September. I was going to say October. We're back in September of 2022. And what are we doing? We're using one time frame, the hourly time frame, and we're asking ourselves, what way is price going? We're moving towards the downside. Okay, cool. So we're only really going to be looking for sells because we really want to capitalize on the downside movement that AUD/USD is creating. So let's identify some significant structures in the market so we get a better idea of where price could potentially bounce at. So we can see that we are on a significant resistance level right now. We've already bounced here once, tried to put in a lower low, failed, came back, tested the level yet again, and it looks like we're steadily creating higher highs and higher lows. So it's a little skeptical to me that we're going to end up bouncing here, but I'm just going to point out some other structures in the market where price could potentially bounce. So just so you know, if price ends up wiping out this zone and then coming back and testing as potential support, I may be looking for potential upside move. That's why all of these sentiment or decisions are context-based, right? You need to have some type of intuition or knowledge of how the markets move to get a better idea of how it's going to move. So we can see we end up pushing back into the zone, and we end up pushing aggressively towards the downside. So if we're going to continue this downtrend, we logically would wipe out this low or continue down towards this low. So I'm going to place a sell, stop loss completely above this previous high. So we'll put it at 90 pips just to make it super, super wide or give the trade some room to breathe. And we'll do it at a 1-to-1 risk to reward ratio. And I'll make sure to click the candle slow so I'm not skipping anything. And we'll see how it pans out. So we begin to push into profit. And let's say that we add another position around, let's say 15 pips, right? So once price pushes a little bit deeper, we're going to add another position and make sure this first position's at break even. So this is what would have happened. I would say this is 15 pips, right? Yeah, that's 15 pips. So what would have happened? We would have added another position, like right around down here. This one would have went to break even, and we could see we would have gotten stopped out of this first position, so we could literally just get rid of it. And now we're just in this trade for right now. And let's see how it plays out. And remember, the stop loss still above the high, so it's still sort of the same trade order. And we're going to let it play out. Now, considering we pushed again aggressively into profit, now 20 pips of profit. Again, remember I said 15 pips, we're going to add another position. So logically, we could add another position. Let's say 15 pips right around here. Stop loss, we're going to bring this one to break even. And we're going to see if we are able to push towards the downside and continue this momentum. Let's see. Begin pushing. And again, right now we would be in really good profit. So you could always close early, but it's ideal to make sure you hit the profit target. Come back, get stopped out of the first trade. And again, stopped out is just break even, so it's not that big of a deal. And let's see, at this point, if we get stopped out of 2 trades at break even, I'll probably just let the trade play out and not keep adding because you probably won't get a good position or a good entry on logical trades. So I'm just going to let this play out. We could see we end up getting stopped out. We entered 3 trades, and it's only -1R. So that's why it's very important to be able to manage your risk or structure your risk in a very, very smart way, because you'll be able to preserve your account balance. So we can see now we're coming back to test these, and I want to be able to just clear this just so that it's not cluttered. I don't think that we're going to end up bouncing here. We've tried to bounce here multiple times and we failed. So I think we're going to end up breaking through the zone, and let's see if we end up doing it. Wow, we did end up bouncing. See, this kid Mike is not even a guru. He doesn't even trade. So let's see if we wipe out the lows. We just wiped out the low. Perfect. Now I'm going to see if we could end up bouncing, which we are. I'm going to place a sell because we just wiped out this nice structure in the market. You could see that we were testing it multiple times right here. Test as support, support, support. Finally broke through, came back, test as resistance, and it looks like we're beginning to push. So let's get a sell. Let's put my stop loss right above this previous high. Let's do 90 pips, sort of like last time. And let's do a 1-to-1 risk to reward ratio. Again, if we're continuing this downtrend, we will wipe out the previous lows. We'll put in a lower high, same old stuff that plays out over and over again. We're getting to push into profit. I'm going to do it so if it wipes out this low, then I'll add another position because that'll be around 20 pips. If we wipe out that low like that, Exactly what I just said. So that I would place it right there, bring this to break even, and then I would bring this target to the initial target and see if we end up pushing. And this one, let's see. This would have smashed TP. So let's say this would get around 2R, right? So if you risk 2%, you would probably make 4% on this. Plus 2R. Let's keep it pushing. And again, I'm going to remove this just to not clutter the chart. I want to make sure that we're identifying these zones. We could see that we have another significant structure in the market right here. I'm going to place a sell here. Again, just a super, super simple bounce around a significant structure in the market, and hopefully we'll be able to go to the 40. I'm not going to chance it because sometimes if you go down to like the 45 or 15-minute time frame, it will like do weird things with backtesting. So I'm just going to place a sell here. We're in a downtrend. We could potentially be putting in a lower high. We haven't wiped out this high yet. This seems like a significant structure where price has clear intent with direction. I'm just going to place a sell here. It looks sound. I'm going to put the stop loss around this high just because it gives it room to breathe. And if price just starts skyrocketing towards the upside, it gives me enough time or enough room for me to exit the trade without getting significant loss. And remember, we're doing 1-to-1 risk to reward ratio. So even if it does skyrocket towards the upside, it's not that big of a deal. So yes, we're going to see if this begins to push. How many pips is that? This is 29 pips, so that's aggressive. I would probably, again, 15, 20 pips is usually a sweet spot where I add my second position. Let's say I did it at a terrible position. Let's say I did it at 20 pips. So that's about 20 pips. I would bring this first position to break even and let the second one run. Let's see what ends up playing out. Come back, first position, break even. And to be quite honest with you, oh, I messed up. First position to break even. And then the second one, I probably would exit at a small loss just off of this because we ended up having a very aggressive push towards the upside. This would probably be around, let's see. I had a 90 pip stop loss. Let's say there's a half unit of loss. Perfect. Close out of the losers quickly. Let the winners run. Let's get rid of this zone. And let's see what ends up panning out now. End up continuing towards the downside. We can see we're beginning to form some type of structure here. I'm not going to place anything yet. Coming back to the zone. If we form a nice bear candle off of this zone, I may look. Okay. That's a very top-heavy wick with the position of the real buy near the bottom of the candle. I'm going to place a sell. Stop loss at 80 pips. And then take profit at a 1-to-1. Let's keep it pushing. I believe this is the fourth trade. I'm going to do like 2 more trades. We're continuously testing this zone. It's looking a little sketch. We push. We're having a very difficult time wiping out these lows. And this is what you have to do, right? It's a lot of intuition. It's a lot of price action. Yeah, it looks like we are pushing really deep into this zone. If we wipe out this zone, I'll probably end up exiting this. Okay. So to be quite honest with you, like I said, this whole time probably would have entered another position around 15 pips. So let's get the 15 pips. Stop loss for this one goes to break even. Take profit for this one around the same target. This would be another 2R winner. So let's drag this over. 2R. I'll do one more trade just to wrap it up. And then we'll get the results. And that's it. We have that nice structure that price was testing. If we come back and test it, end up wiping through the zone. No biggie. I'm actually going to get rid of this just because it looks like we're not respecting it. But again, we're just steadily creating lower highs and lower lows, and we're just capitalizing on this downtrend move, right? Out of the 4 trades, we've had 2 winners, and 2 losers. Look at the 2 losers. The 2 losers combined are 1.5 R. The 2 winners combined are 2 R. So this would be around what, 2.5 R for out of all the trades. Again, we're coming back to this structure in the market. We've tested it so many times that it's sketching me out that we're not going to end up respecting it. So we can see we're beginning to break through. Let's see what ends up happening now. Perfect. So we end up continuing towards the downside. Again, I like this structure in the market, to be quite honest with you. We've tested this multiple times. I just have a feeling that we could potentially break and retest this zone, unless we test this as support. Let's see if we can come back and test this as resistance, this structure right here. Beginning to push up slowly but surely. Let's say right there we end up placing a sell because we're beginning to gain some type of bearish pressure around this zone. Stop loss is going to be completely above this zone, so it's going to be give you a good amount of room to breathe. Take profit at a 1-to-1. Let's wrap it up. Let's see if we could get a nice little TP smash to wrap this baby up. Okay. Right here, I would end up probably exiting this trade because we've broken through the initial zone that we thought price was going to bounce at, come back, tested this previous high, and now we're coming back and testing as potential like support, and it looks like we're beginning to gain some bullish pressure. I'm going to get out of this trade just to play it safe. This is around 33, we'll call it 40 pips out of a 130 pip. Let's call this like a 0.3% loss, if that. We'll do 0.5 just to be conservative, right? So out of these 5 trades, 3 of them lost, 2 of them hit take profit, right? So what is that? I don't know, 40% win rate, winning percentage. So 40%, and this is just quick, 40%, or excuse me, 40%. This would have yielded plus 2R. And let's break that down because we lost 1R, we lost another half R, and we lost another half R. So that's 2R in total that we lost, but we won 2 trades that yielded us 4R, right? And if you're asking yourself, what the heck is R? R is just a unit of reward. So if you yielded, if you risked 2% per trade, you would yield 4% each winner, and you would only lose 2% each loser. So R is just a multiplier of whatever you're risking on each trade. So with this strategy, we're just trading bounces off of significant structures in the market. We're capitalizing our upside or downside move by adding another position, and we're mitigating our risk by moving that first position to break even and letting that second position run. That's the whole point. It's literally trading bounces off of significant structures. And I literally trade this live time every single day with my premium members over and over and over again. Here's AUD CAD. I believe I cashed out big time on AUD CAD. Take a look at this one. We broke out of the previous lows, came back and tested the resistance level. We began pushing, wiped out this low. I placed a sell order. We ended up pushing into profit. I placed another sell order, and we could see we began pushing aggressively into profit. What ended up happening? We smashed take profit. How much did I make? Around $6,000, right? And I'm not saying this to brag. I'm not saying it to be, oh, I made so much money. No, I'm saying it because you could do it. It's simple. It's not easy. It's simple. I do it over and over and over again. If you're not in my free general Discord server, what are you doing? Like I said, I provide free analysis nearly on a day-to-day basis, a community chat, free course, free support. I want you to be able to DM me and get a better idea of how to trade the markets, because it doesn't have to be super complex. You don't have to have all these different Fibonacci retracements, all these different sentiments, and look at fundamental analysis. No, I just look at support and resistance on one time frame, and it works. Everything works in the market. It's about what works best for you. I hope this helped you. And if you haven't already, check out my free Discord server. And of course, we would love you in the premium membership. I love you all. Thank you so much. And I'll see you guys on the next one. Cheers.